And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. It is time for the market forecast for Thursday, November the 17th. My name is John Hoagland. Thank you for trusting me with your time. I hope you know that I sincerely mean that. We got our work cut out for us today. As always, our focus is on context, good risk management, and staying patient in our trading today, which may prove to be a little bit of a challenge. Early this morning, Bullard spoke. He had a few things to say, mostly that he's suggesting rates need to reach between 5 and 7%. So we've got more rate hikes ahead of us, where I'm sure we're all well aware of that. As far as the data dump this morning, we had 7:30 numbers, the housing starts and permits, both of them coming out higher. Well, the starts is actually, they were both a little bit higher than expected. Jobless claims, we were expecting initial jobless claims to come in at 225. It came in at 222, but continuing jobless claims came out higher than expected, only by about 4,000. I think the real shocker this morning is the Philly Fed number. The last month's was minus 8.7. They were expecting minus 6.2, but it came out minus 19.4. So they're not looking good as far as the business conditions in Philadelphia. We have 4 talking heads today. We had Bullard already speaking. We have Bowman at 8:15. We have Meester at 8:40. And we have the best name for a Fed member, Neil Kashkari, at 9:40. So we've got some Fed speak to keep an eye on. As far as what's going on, stocks have begun a leg lower, it looks like. Many talking heads blaming it on, of course, Fed speak, strong retail sales indicating more rate hikes, and tech weakness. NVIDIA had some weaker numbers yesterday, as well as some technical weakness. We're going to see that in the charts this morning. In earnings, retailers fared pretty well this morning. We had BJ's Warehouse, or BJ's Wholesale, Macy's, and Kohl's all beating expectations. The largest one this morning had some mixed numbers, Alibaba with some mixed numbers this morning. Crude traders should trade the January contract this morning. We've switched all our charts over. We've switched all our levels over to the January contract, and the volume will be greater in January today. So make sure you make that switch this morning. It's trading lower on hopes, I guess, for a potential peace talks in Ukraine. I know where they're putting a little bit of pressure on the possibility for that, as well as questionable demand out of China. So the VIX this morning is already up about 4%. 25.08 is last I saw it. The dollar index bouncing off the lows. 107 is right where it was at last I checked. It's up about 0.7%, and the yield on the 10-year up a little bit at 3.76%. And again, last I checked, we've got our equities down. Well, the S&P is down 1.5%, NASDAQ down 1.8%, and the Dow futures down about 1.1%, and we're just kind of dragging along the bottoms. We have been talking about the idea that the auction process to the upside in the equities has been tiring. All it takes is a little bit of bad news for these markets to turn and run the other way. So we've been kind of anticipating technically that we may see a pullback, and we're getting a little bit of help from some of the news and some of the economic numbers that did come out today. Tomorrow, we only have really to kind of lean on, as far as important numbers, as the existing home sales. A lot of eyes on the housing market, and misleading indicators also due out tomorrow. Good morning, everybody. Caprice 101, first in the room. You win the prize. Scott saw, and he conquered. Shaw, good morning, and happy Thursday to you. Sunny Joe, good morning. Theo, Serenity Trader, Dimitar, Caesar, George. Lacey's on her couch. She finally found her couch, and she loves it now. Bill Phillips, Terry King, Charles, my brother Rick, good to see you. Love you. Alejandro, DA, JM, good morning. Eric Hall, Dowitzer, Sarah Hall, good morning, prayers and love to you as well. The rooster already crowing this morning. It's sun is up. It is cold outside here. I don't know where it is by you. I know if you're east of the Great Lakes, you're going to be getting a lot of snow. I'm hearing this week. It's beginning, I guess, tonight and all through the weekend. So, where they're talking about 2 to 4 feet of snow. It's only November. We're not ready for this. Come on, man. Haggle Matters. Good morning, Captain Price. Mike. Good morning, Glitter Sandwich. Captain Price. Still global concerns intact. Yes, all of those uncertainties still remain. It's amazing to me how really resilient these equities markets can be. Good morning, Scarlet Arachnid, Rob T, Rusty Golfer, Nisa, Gnostic, Danny Ireland. Good morning. Where are the peace negotiations? The fog of war is so sad. Yes, it certainly is, Danny. I'm continuing and always praying for peace all over the world, and we just got to keep doing that. JST Wave, Timothy Marks, Raz Mick. Good morning. Hope you're doing well also. Stephen C. Columbus. Rooster, my coop is in New Orleans. Cold here, but not as bad as you. Captain Price, yeah, staying safe. Yeah, good. Yeah, I mean, every year I kind of remind myself that, if you're not in prime shape, be really careful if you are out there shoveling. Every year we hear about those folks that get out there and shovel and they aren't physically prepared to do such heavy work and bad things happen. So, I'm lucky. I've got a 23-year-old snowblower. His name is Luke, and hopefully he will start when we do start getting some shovelable snow here. Master Roy, good morning. Sunny. All right. Those who do not want to imitate anything produce nothing. Salvador Dali. Most artists are stealing from each other, right? And, that's a good quote. If you don't want to imitate anything, you're not going to produce anything. Well, we're all learning from each other in these markets. And speaking of which, we have Make Hogue Money right after the market forecast this morning. So we're going to get into the charts pretty quickly here. And so we can be prepared at 8:20. We've got the markets out of balance. It looks like it might be an exciting Make Hogue Money. I'm really looking forward to seeing your trade ideas and taking some of them. Yesterday's session at the end of the day really wasn't much opportunity, so we really didn't get anything done. So we'll see if we can make a little money for the end of the week here, Thursday. Make Hogue Money. Looking forward to seeing you all there. All right. Let's get down to business. Let's start with the daily in the S&Ps and see what we see. What kind of context are we looking at? Well, the context has changed. The situation has changed. We've had this nice run up. We're talking about the fact that the auction to the upside has begun to suffer. We fell into range. Now we've broken out below that range. Something we were discussing in Make Hogue Money yesterday was, we were kind of hoping to see this market break out of this range that it's been in yesterday so we could catch some of this move. Unfortunately, it happened overnight, and it complicates things for us today. We lost 17,000 in open interest yesterday. We also had very low volume. That's a sign of possible change because the market is using up its ability to facilitate trade here. If it does that, it's going to find other areas to facilitate trade, and obviously that is to the downside. We're using a breakout strategy, so we're looking for opportunities to sell strength into this market today unless something changes. We've had the data dump. The data dump doesn't seem to have changed our direction much at all, so we're trying to find opportunities to look for continuation in this move to the downside. Unfortunately, again, that breakout did start overnight, so we're starting behind the 8 ball here this morning. I'm excited for Make Hogue Money today. I think we're going to find some decent opportunities, and of course, I'm looking for those that are willing to help. Well, look at what we've done already. We've tested down to this naked point of control, which is right here on my sheet as a visual target for the regular trading hour session if we did break out below. So we've been one time framing since about the London Open, and we haven't seen any sign of changing of that. So we've got gap rules. Obviously, we've got a substantial gap. It's going to be unlikely for that to close. The previous balance extreme, which is all the way up at 39.51 to 39.61, 39.51 to 39.61, right up here, doesn't look like we're going to have much of an opportunity for a pullback for that to find opportunities. So again, we're going to watch the open. Maybe there'll be an opportunity for the opening range trade. We don't know. We'll figure it out. We'll vote. We'll take it. We won't, whatever it is. It's all in how traders are going to digest the data throughout the day. Obviously, there is continuation to the downside. The way the Fed speakers are talking, they're very hawkish, and they're telling everybody, hey, we haven't done enough yet. So again, this visual target is this naked point of control down here. Where's the next one? All the way down here. 3,800. We've been talking a lot about 3,800 recently in Make Hogue Money. But that's the next visual target. That's the next naked volume point of control that's on this chart. I don't know if we get there today. It's possible. Look where we went on this was that CPI day, whatever day that was, when we popped like that. It's possible. It is entirely possible. Yeah, I'm kind of feeling the same way, JD. I don't know about what I'm going to do with the S&Ps today because we're late to the party. The breakout below this area of balance started around 4 o'clock, and it has been continuing its push to the downside. So I don't know. We'll figure it out. We're going to watch and see what folks have to say about opportunities and Make Hogue Money. I'm willing to take the trades. Let's decide. Let's vote, and let's take them. But again, it's going to be a challenging day, and days like this always seem to get me overexcited. If I stay really patient, if I tell myself not to trade today, I will find something much better than if I go looking for trades today. But we're going to see what we see and Make Hogue Money. Here's crude oil, the January contract, that is F. It's about a 50-cent discount to the December contract. Some of the fundamentals. The EIA announced a 5.4 million barrel boost yesterday. Okay. Peace talks? Is that in the realm? I know, there's lots of folks talking about what General Milley was talking about yesterday about, maybe it's time to sit down and talk. We don't know if that's going to happen. Of course, China demand has been in question for a couple of weeks now, for a couple of years actually. Technical. We have an M top here. Do we have a head and shoulders here? If this is a head and shoulders, it's looking like we're probably breaking out of the neckline, which, according to measured moves, would take us all the way down to the base of the M pattern here. It takes us down below 76, almost to 75. That would be good, I would think. Take a look at the 30-minute chart. So we are lower highs, lower lows. Our overnight was closed above weekly kickoff high. We are now spending more and more time below that level. If we keep spending time below that level, it's going to mark more time in exception of lower pricing. We've got a gap to the downside. We are just about to hit the open. If we can't close the gap, what does that mean? Well, if we can't close the gap relatively early, we trade in the direction of the gap. Relatively early is a subjective term. What it means to you, it means to you. If we can't close that gap, only one thing left to do, and that's to start to either rotate or continue to the downside. What is Our next visual point of control, or visual naked point of control, is down here. It's at 80, 90, let's call it, close enough for rock and roll. Remember, all these numbers and levels are zones. They're not finite. Here's the first minute. Here's our overnight low. We're right at it. 13 tick opening range so far. Yeah, I knew that wasn't going to last. 20 tick, 22 tick opening range so far. Taking out the overnight low. So 83.29, the high of the opening range. Let's go back at the end of the charts here, and we'll go see if the opening range has provided a good downside opportunity or upside opportunity. Here's the NASDAQ, very similar to the S&Ps. It's an exhausted upside auction. What else do you want to know? There's a lot of excess up here. The market did try and break out. It held up here. It did not attract new business. Volume started to die off. Yesterday we lost 4,600 in open interest. Technically, I think the writing was pretty much on the wall for what this market was going to do. It was either going to consolidate or get a pullback. With a little bit of bad news, we're getting a pullback. We're adjusting inventory in the process. Yesterday we had long liquidation evident in the S&Ps as well as in the NASDAQ. So some of our probably longer time frame traders adjusted inventory and started looking to the other direction. So we're going to start to look for opportunities to sell strength, which is going to, of course, complicate things because we do have such a large gap and some more volatile opportunities today. So we were looking at the breakout strategy being in play, at least for now. We've got a long way to go before we get back into the levels of the lower level of the previous balance. So again, we're going to be really cautious looking for opportunities, I think, in the direction of the breakout. I mean, that's the rule, right? When we break out, we look for opportunities in the direction of the breakout. Unfortunately, it happened last night. I was sleeping and didn't get to participate, so I'm stuck trying to figure out how to participate today. I need your help. Come to Make Hogue Money. To look at the 30 here, we've got... higher highs and lows, that's now broken. We're putting in lower highs and lower lows now. I realize pretty short time frame, but this is how the upside auction dies. A lot of excess. Now we're looking to see possible continuation to the downside. Naked point of control, volume point of control down here would be a decent target. We're already at that naked point of control in the S&Ps. Gap rules, again, if we can't close the gap relatively early, we look for opportunities in the direction of the gap. Take a look at gold. Again, an aging upside auction. We've been talking about this for 2 days. Market got close to weekly kickoff high, and if there's going to be an adjustment, that adjustment is going to be to get out of longs and get short in longer time frame, or break out above and adjust inventories to get out of shorts or get long. Obviously, it looks as though the market has chosen to get out of longs yesterday with a negative 16,000 in open interest on lower volume. Okay, when we see the market continuing to go higher on decent volume and increasing open interest, that's more likely to continue. Yesterday, we saw a drop in open interest and lower volume. We start to look in the opposite direction. And unfortunately, again, it happened last night while most of us were sleeping. We're seeking strength to limit risk on shorts. We're going to see in Make Hogue Money a technique that I have been relatively successful with, using volume profile and very short time frame, trying to use low volume nodes in that short time frame to look for opportunities to use those low volume nodes as resistance or support. Today, you'll probably be looking for them as resistance. Here's the 30. Okay, we left a little bit of a gap here last week. It looks like we've already checked that gap in regular trading hours. We've got overnight inventory to the short side. We've got up, higher highs, higher lows. Now we're putting in lower highs and lower lows. We've got the naked point of control here. Same day as the equities put up those big days. We have not yet reached that. There's not a lot of weaker structure down below there. Okay, this was the big up day where we have that naked point of control, but all the other points of control in recent past, have been checked. We got one left down here near weekly kickoff low. That's a long ways away. But again, we're going to be looking for opportunities to sell strength until proven wrong, because again, we've broken the upside structure in short time frame, and we're putting in lower highs, lower lows. That's what we're going to be looking for, is to find pullbacks to sell against strength where we can limit risk. And I can't stress that enough. If you can't decide where your risk is, you don't take the trade. If the risk isn't reasonable, you don't take the trade. You got to be looking for trade locations based on the risk you have to take, not because you don't want to miss the trade. Here's the euro, as the euro is gold. Dollar bounce. We're seeing the market come off, okay? The auction ends, again, close to weekly kickoff low, very similar to the to gold. And volume and open interest dropped yesterday. Again, we dropped 2,800 in open interest, low volume on an attempt to trade above weekly kickoff high at some point. It was in the overnight that we tried. We never even got there in the regular trading hours, and now we're heading in the opposite direction. We've opened with a gap. We have gap rules. We're looking for opportunities to sell strength. It's going to be hard to do. Getting into a market that is already directional is one of the hardest things it's one of the hardest things I've done. It's always been a challenge to me, and I've never been very good at getting into markets that are already directional. I've caught a few that have started direction, but in order to get into a market that's already directional, it's a very difficult thing to do. And we're going to see if we can find opportunity using the volume profile and short time frame to see if we can catch a move in the S&Ps today. We got to see what the market looks like as it opens up. Got a huge gap left down below here. And lots of targets, lots of visual targets down below. Naked point of control, two gaps. And lots more points of control lower than that. That's pretty aggressive for a one-day move. But again, as things sit right now, the market is one-time framing lower. Until that breaks, we're looking for opportunities to sell strengths. We got the 10-year yield creeping up again. Again, another upside auction that has failed to continue above weekly kickoff high. What did we do yesterday? We lost 3,200 in open interest on an up day. And well, on an up day that we lose open interest, that's not necessarily good for the upside auction. We also lost volume. And we'll be getting pretty close to getting to rollover for treasuries here. Let me double check that. I'm just checking to see if I've got that information here. No, I don't see it on here. I'm going to check that for everybody, though. I think we should be getting pretty close to the rollover for treasuries. But here we go again, on a finished upside auction and a new auction to the downside. It's going to make it difficult for us to find opportunities to sell strength, but that's, I think, what we need to do here. As an upside auction ends, a new auction downside begins. Are we going to range here? We've got space down below to continue to create this range. Take a look at the 30. Okay. Overnight inventory to the short side with no gap. But we've been largely kind of one-time framing lower. We're right near yesterday's low, taking out our overnight low. I mean, it's a hard thing to try and sell here. If we are going to continue lower, obviously this naked point of control is a visual that traders, if traders are focused on that level, if they're thinking the price is going to go there, they'll make price go there. And for the natural gas, pushing the upper extremes of the range, open interest increased yesterday on higher volume off of weekly kickoff low. We attracted buyers at this level. Don't forget it is in rollover, and today we do have the natural gas numbers due out at 9:30. New longs coming into this market, new long bets against the weekly kickoff low. Are they longer time frame? We added 3,700 in open interest. It does indicate the possibility thereof. We had a late spike yesterday in the natural gas, and we know those rules are if we open above if we open flat out above the late spike, that's the strongest acceptance of higher pricing, and we can see price moving higher already. We open inside the late spike, that is less probable but likely acceptance of higher pricing, and opening below the late spike is rejection of higher pricing. We're not dealing with either but the first one, with any of them but the first one. We've opened above. That's the highest acceptance of higher pricing. Even if we were to get down to the base is so far away, it's going to be very difficult to stay patient enough to let the market come down to that level. No gap close. We're looking for opportunities to buy weakness until something changes. We got a long way to go before we get to this weekly kickoff. Before we get to value high, which is basically the base of the late spike. Overnight inventory was largely flat when I was looking at it this morning, but we're seeing buyers coming into this market now. Let's take a look at crude oil opening range left at the low of the session. So there's our opening range low. We've closed the gap. Interesting. Now, the next thing we might be looking for is value area special situation play, or what we used to call the 80% play, which I now call the 65% play. We accept inside value from yesterday. There's a high probability of price reaching the other extreme of value at some point during the session today. That's if we accept. Acceptance, again, is a subjective term. We used to say we needed 2 30-minute bars to close inside previous value to mark acceptance. Sometimes the market won't give you that. Sometimes it'll do that and then deny it. It's a tough trade to take. But if we can't really show acceptance inside range, I'm still thinking we want to be looking for opportunities to sell strength. Although we did close the gap, and we closed it relatively early. Stay patient. Stay patient in that. All right. You guys talking about some opportunities in the natural gas Caesar. If you trade natural gas, I give it to you. NASDAQ took 60 points on the MSE and got short and got the scalp bounce. Nice. What's going to happen now? We don't know. Right? Excellent, Serenity Trader. The Tendler session was very informative. I'm going to finish the book now. DA, yes. Here is the link where I get the volume and open interest information. It's okay. Don't worry about it. I got a couple of minutes here before we need to get moving for Make Hogue Money. There's the link. If you have questions on reading that, how I read it, how I collect the information, come to group coaching on Monday and ask. Don't have time to do that much right here, but don't be Don't ever be sorry to ask the questions. All right, let's get ready for our trading day today. Take your deep breath. I hope you guys do this with me. Stay humble, grateful, and creative today. Stay centered. If your ball of clay is not centered, you will make nothing beautiful. You've got to be centered internally and mentally, physically and emotionally and spiritually to find success in futures trading. So look forward to seeing you at Make Hogue Money. Let's see what we can find today, and we'll see what happens. No recap today. We've got the podcast with Dan and Jack. I look forward to seeing them, and then we'll forecast tomorrow morning, and that'll be it for the week for me. Next week is Thanksgiving. Monday, Tuesday, and Wednesday we'll have normal procedures, if you will, as far as a forecast, recap, and everything else. Thursday and Friday we'll be off, and I hope that you are too. Make sure you take some time to yourself, to spend time with loved ones, take care of yourself, be good to yourself, be good to others. Keep praying for peace, folks, and I will see you in just a few minutes in the proverbial trading pit for Make Hogue Money. Let's go get them.